Hello guys, welcome back to this channel. Today we're going to review a trade on gold, a killer trade that happened this week. And as you guys can see, I posted this trade in my community. I said this range on gold looks amazing. I'm expecting a nice breakout soon. And a nice breakout happened. By the way, if you're not part of this community, you can join right now for free. It's 100% free. And you can click on the link in the description. Everyone is welcome from beginner to advanced trader. You can join this community right now. But without further ado, let's jump straight into the trade. And first thing we need to do is actually to go to the high time frame. Let's go to the daily chart. And what we can see here on the daily chart, we can see that this market is in an uptrend. Okay, we are in an uptrend. And when you zoom in here, you can see that we are consolidating. It's a kind of flag. It's a kind of continuation pattern. So we are making higher lows, and right now we are just going sideways for about a month inside of this tight range. So for me, this was a great signal that the market could continue upwards. And once we go to the 15-minute chart, you can see the range, how perfect this was, because it tested the top and the bottom of the range multiple times, which is amazing for a breakout trader. And this last sort of impulse here test the top and gave you the nice pullback and the battle. I'm going to show you guys this pattern over and over again. So for those who don't know how to trade breakouts, or for those who are starting to trade right now, just stick around because I'm going to show the same pattern on the different ranges and show you guys how this is an amazing confirmation before you go for the break. And to be honest, I was feeling pretty bullish already in this period in here, but I did not buy this break. I did not get faked out like many traders did. Why? Because this for me was extended. And right there is the first sort of tip and advice I give to you if you want to trade breakouts. Do not trade a breakout that's extended. So whenever you have a move that is extended, wait for the pullback and then you can go for the breakout. So I was waiting for a pullback and the pullback happening here. So I was like, okay, cool. And then we had this nice double bottom in there, which is an amazing bullish price action, pretty close to the bottom of the range. It's good that we did not touch the low of the range, the bottom of the range, because it shows that the buyers did not even let the price go back to the bottom of the range. They created this double bottom pattern, and then the price started to grind back up. Again, this grind back up, it's extended. Therefore, I'm not going to buy this level until we pull back. And once we pull back in here, that was my kind of confirmation that, okay, now whatever happens, I'm buying the break of this. Because the top of this range was tested multiple times. 1, 2, 3, 4, 5, 6, 7, 8 times. So a lot of times. So again, the more we test the top of the bottom of the range, the more likely it is to break. And the longer it ranges, the bigger is the break. So I had all these things in the back of my mind. And then once we pull back in there, we had what I like to call the last battle, which is the battle between the bulls and the bears. Because the bears know they cannot let the price go back up there because no one's going to sell that anymore. Everyone already sold this. They already made money. And then now it's just like there is no reason for you to sell that anymore. Therefore, the battle happens down here because what they want to create, they wanted to create a low, lower high, lower low, right? But they failed. They failed to create the lower high, and then the lower low could not be formed. Therefore, this is still strong, and then the buyers pushed this up and broke this sort of battle, this sort of consolidation. And then as you can see, after the break of this consolidation, the market just shoots up. And here, I've got to be honest, the first thing I want to reveal with you guys is that the break was not clean. It was very messy, in my opinion. And it was emotionally hard to manage. I'm going to go to the 3-minute chart, even though I don't use it, but I want to show you guys this. When the break happened, I went long, I bought the break, and then it looked like it was going to false break. You can see here during this move down, it was very tough. And the thoughts that I was having in my mind was, let's get out at break even. Oh no, this is not going to work. I'm going to lose money. This is going to be a fake out. Like all these negative thoughts were in my mind. And due to some mindfulness practice that I do, I was able to just observe these thoughts and just let them go and focus on the execution of my strategy, which is I'm going to buy there and my stop's going to be below these lows. And as long as price doesn't break these lows, I'm fine. Okay, I'm still in a trade. The breakout is still valid. And it was mentally hard, especially when I was getting pretty close to my stop loss. And I was thinking about how much money I was going to lose. And I had to ignore all these thoughts and be emotionally strong. And trading psychology is very tough for those who are starting, especially for those who are starting. And I'm just going to show you guys that I'm a human and I have this sort of thoughts as well. And the key here is to just be aware of them and not let them control and override the strategy and the execution and the plan you had for this trade. So my plan for this trade was I buy there, my stop is below these lows. I'm going to get out I'm going to go back to the 15-minute chart because this trade is on the 15-minute. I'm going to get half out at 2,550. Just before 2,550, which is a round number. And the rest, I'm going to let it run until we break below the 15 EMA, which is a good EMA I like to use sometimes. You can see here, we break below the 15 EMA up there. But I've got to be honest, and that was the mistake I made on this trade. And that's why it's important to review your trades because you can improve in your execution. When I saw this engulfing bar here, I don't know how you guys feel about it, but I definitely felt that now the market is going to break below this 15 EMA. And the thoughts were, okay, let me just get out because I'm going to, why I'm going to let the price go all the way back down here if I can get out there and make more money. So again, the mind is still thinking about the money, okay? And I was just making a little bit under $1,000, so I was already like, okay, this is a good profit, I'll take it. So this bearish engulfing overrode my trading plan, and I ended up forgetting that, look, regardless of whatever price action happens, I'm gonna wait for a break below the 15 EMA. And here, it's not, the 15 EMA is not broken, therefore I should not get out of this trade. But I did. I'm a human, I make mistakes sometimes, and that's why it's important to review the trade. And as you can see, the market actually held the 15 perfectly and only went, and it only broke the 15 EMA up there at 2564. And if I had held, I would improve my R in 100%, okay? And so if I can just improve on this execution, not getting out here, but getting out there, I will improve my results in 100%, at least in this trade. And that's it. That's why it's important to review every important trade you have on the week and make sure you write things down and make sure you have a plan for the next time when it happens, you know exactly what you should do. Whatever price action happens, doesn't matter how bearish or bullish or reversal it looks, I'm going to wait for market to break below or above the 15 EMA. And there I need some discipline and I need some awareness in the same way I needed the awareness and the discipline here so that I don't close this trade earlier and I ended up missing the break. So it's good that I did not miss the break, but I still have room to improve on my exits, okay? Especially taking profits. For those people who don't know how to trade a breakout, I'm gonna teach you guys this sort of pattern that's very important if you wanna be a successful breakout trader. In this pattern, you never buy or sell a break of a range when it's extended, and you wait for mean reversion, and after the mean reversion, you wait for the battle between the bulls and the bears. And that battle is going to be your last confirmation where you're going to buy or sell the break of that range. And let me show you this. I'm going to go to, so let me just show here is extended. We're not buying that. We wait for the pullback. That's the battle. All right? All right. Let's go now to another range. Let me go to maybe a 4-hour chart. And here we have one. You can see this is the range, okay? This is the range, okay? And now This is extended. Okay? You're not buying here. Look how people get trapped. And that's why so many people lose money in trading, because they see this and they buy there and they get trapped. But what happened? The market mean revert, creates the battle, and then we break. You see that? So again, when it's extended, you're not going to buy the break of this level or buy the break of this level. You wait for a mean reversion, then a battle, and after the battle, whoever wins the battle, you go for the break. Let me show you another range. Maybe let me show you. I think I need to go to the daily chart. The daily chart is going to be better to see. Again, look at this. Look at this range. Massive range, right? And look this. This is extended, an extension. And look what happened. It false breaks, fake every single breakout trade. And that's why so many people lose money trading breakouts, because they are not aware of this simple pattern that I'm teaching you guys here right now for free. And make sure you don't buy or sell the break when it's extended. So it's extended, it's going to fake people out. The mean reversion is going to come, wait for the mean reversion, and then wait for the battle. Look the battle here. Look the battle. And the bulls won the battle, and the market shoots up. It's that simple, guys. So whenever you wait for a break, you can... sometimes it's going to fake the range, sometimes it's not going to fake the range. Look at this range, by the way. This is the range, right? This is the range. This is extended. This is extended. And then we have what? We have a pullback. And then here is the battle. And then on this battle, we wait to see who is going to win, the bulls or the bears. In this case, the bulls won the battle again. And here you got a nice breakout again. So there we have it, guys. Not going to show you many more examples, but I think you guys get it. In this case here, congratulations to everyone in my community who made money on this trade. I know a few friends who did make money. If you got this far on this video, show some love, hit that like button, subscribe to this channel. I'm going to keep posting these trade reviews. I'm going to keep posting tutorials. I'm going to keep teaching strategies. And I'll see you guys next time. Peace out.